Every time you lose a trade, someone else wins. But have you ever wondered who that person really is? The secret is not truly hidden. It's coded into the market structure and liquidity. The truth is, the market is engineered. When you as a retail trader buy, smart money sells. And once you understand how liquidity and market structure work together, you will stop trading like the crowd and start thinking like the institutions. In this video, I am going to review how smart money uses liquidity zones and market structure to manipulate price, and how you can align with them to catch sniper entries and make consistent profits. Stay with me to the end, because once you master this, you will never look at the chart the same way again. Let's proceed. So right here on the chart, let's start with liquidity, the heartbeat of the market. Liquidity is simply where money is sitting, and in Forex, money means orders, your orders. Every stop loss, every pending order is liquidity waiting to be taken. Imagine a pool of resting orders below your previous low here and above your previous high around this zone. That's where smart money hunts. As a trader, when you open your chart, you want to analyze the chart and look out for entry opportunities, but smart money opened your chart looking for large volume of resting orders. Oftentimes, when price spikes above a high or spikes below a low only to reverse instantly, that's not coincidence, it's liquidity being grabbed. And that's the footprint of the institutional traders, because before institutions can move price in their redirection, they need fuel, and that fuel is liquidity. Your orders sitting around this zone, your stop loss orders, your pending orders as well. So at this point, retail traders call this act here manipulation, but smart money call it order collection. That's their trading strategy. To avoid this manipulation right here and align with the smart money strategy, you need to learn to think and trade like the institutions do. So as a smart trader, when next you open your chart, pay attention to where you have large volume of resting orders like this zone. Act like the institutions and position yourself to grab liquidity from here or from this high. So moving on, as a smart trader, let's quickly highlight our liquidity points, because we want to trade alongside institutions in the market. And also, if you look at this, you can see that we have an impulsive move here, and this is a correction. So at this point, you can clearly see that this is an accumulation of liquidity by the big players. Having this understanding and seeing how these structures are formed, like I said previously, we'll still go ahead and mark our liquidity pools, liquidity zones. So as a smart trader, always pay attention to the liquidity point. Firstly, if you look at the chart, you can see that price is nicely building a liquidity structure right here. A lot of traders will be looking at buying from this zone, thinking that this is a bounce on the trend to keep buying. But as a smart trader, looking at this, you can clearly tell that this is a liquidity structure. And then based on this bearish move, we can also see that we have a liquidity structure sitting right here. So at this point, having spotted these zones, as a smart trader, all you need to do is to stay off this chart until smart money has signaled their footprint on the chart, and then we can trade alongside smart money. So at this point, we're going to highlight this zone as our point of liquidity, and this zone also as our point of liquidity. So once we get a signal and a signal confirmation, then we can go long or short as the case may be. So moving on, let's play price forward and see how we can identify the footprint of the institutions and align that with our market structure to get better trading opportunities. Alright guys, clearly you can see that there is a liquidity grab around this zone, as you can see. Okay, the big players have done their thing. So at this point, most retail traders will see this as a breakout and they will mark this zone to start selling. No guys, this is not a good trading approach. We don't just carry out technical analysis blindly. We pay attention to price behavior analysis as well. Now, based on this, can you see how this strong momentum candle countered these liquidities sitting around these zones right here? Okay, around these zones, you can see price has cleared all the liquidity sitting around here, because obviously those who are going in on a buying position around here are setting their stop loss below this low, and you can see another strong inducement right here, inducing traders, and then their stop loss is around here. Okay, and then you can see another beautiful engulfing candle right here, and guess what guys, everything here has been smashed and taken by the big players, by the institutions. Okay, and trust me, whoever that is going in on a trade here would likely set their profit target around this high or even around this recent high. But guys, you can clearly see that the big players actually looked out for where there is high volume of orders resting on the chart, and you can clearly see that we have high volume of buying orders sitting here. Okay, stop losses around this zone. So now back to our price behavior analysis. Okay, after the strong momentum candle grabbing liquidity from the here, this does not signal a sell momentum. Why? Because price behavior analysis clearly has indicated that, as you can see, the second candle here indicate that this is a manipulation. So this is an advanced thing which I also teach in details in my mentorship program, how to identify manipulations and strength in the market. Okay, a lot of traders will be looking at this to sell, and trust me guys, you know, the funny thing is that the market will always give you a signal at every zone in the market. So the only way you can filter this signal is by seeing the market just like the institutions do. So moving on, let's still play price forward and see, because just like I said previously, there is a probability that price is going to react here, inducing more sellers and then grab the liquidity again. For me, based on my experience and based on this analysis that we have spotted, and based on how the institutions, you know, usually look at the market, this is a liquidity hunt by the institutions to fuel the next buying phase. Remember that liquidity acts as fuel in the market, and without liquidity, price will likely not push higher or lower. Also, this does not mean that we should just start buying here because there's a liquidity grab. Okay, we don't trade blindly. We follow systematic principles before executing our order. That is what makes us smart traders. Okay, so before we buy here, we need a confirmation signaling that the institutions that carried out this move are now ready to continue fueling the buy move. So moving on, this brings us to the next concept, which is market structure. So at this point, we are going to be looking at how to integrate market structure with your liquidity concept to trade alongside institutions do and make profits. So moving on, as a smart trader, first thing you need to do when you come up in your chart is to ensure that your market structure is clearly identified and outlined on the chart. Okay, so if I show you the chart, guys, you can clearly see that we are in a bullish trend. This market has been in an upward trend, all right, for a while now. So based on this, you can clearly see that this has signaled that price actually had a pullback to take out liquidity from here, and then we'll keep pushing higher. So now that we've seen the trend, okay, as you know, we are not discussing top-down analysis today, or neither are we looking at market structure breakdown. Else I would have broken down the structure for you to really clearly see where this price is reacting from. So as you can see, there is a POY right here that this price is reacting from. Okay, but because I don't want this video to be too lengthy, and remember, we are just discussing liquidity. So based on this, now that we have clearly seen that price has grabbed liquidity, it means that price still wants to continue in the bullish side. Remember, liquidity fuels the market. Now that you understand liquidity, let's now connect it with market structure. Market structure tells you where price is heading next. Okay, it's the roadmap that shows you whether the market is in an upward trend or downward trend or in a range building liquidity. But here is the secret. Okay, the shift in structure is not just the pattern, it's what gives you and I, smart traders, their confirmation. Okay, so right here, as you can see, when the market grabs liquidity and there is a shift in structure, that's your clue that a reversal or continuation is on the way. So instead of chasing price, you need to wait for a liquidity grab, and then, like I said, we are trying to combine liquidity, structure, and entry. So you need to wait for a liquidity grab, and then you need to wait for a structure break. And as you can see, you need to also have an understanding of your market structure. So our market structure is bullish, as you can see. And then after this liquidity break, for us to confirm that this trend wants to continue in a bullish side, we need to ensure that we have a shift in structure. That's the real smart money flow. So putting all together, the secret tip here is that you need to think of liquidity as the setup and then market structure as confirmation. What does this imply? This simply means that you start warming up for your entry. You don't trade because price grabbed liquidity. You trade because price took liquidity and then shifted structure. So now that we have a signal, after liquidity sweep, we look out for our market structure shift. So where is our market structure shift? Clearly, we have our structure shift zone around this zone. Okay, so let's quickly highlight that, and then we quickly play price forward to determine our signal confirmation. So here, this is our structure shift zone. So guys, I'm not going to delete this POY here because I want you to see how price actually induce traders. So that is why you need a confirmation. You need to be sure you understand what you're doing, because even when you have a wrong analysis, price is going to give you an entry signal. So moving on, let's play price forward and see how this plays out. So always wait for market to come to you. Do not force a trade. Do not just start jumping a trade without planning the trade. So now we have planned our trade. We need a confirmation, then we can execute our order. Remember, the confirmation, like I said previously, is a shift in market structure, which we have highlighted here. So once we get that, we execute our entry. So this is very important for you to note. So right here, guys, as you can see, patience is key. It's very important for you to be patient, to wait for your setup to validate itself on the chart before you start executing your orders. So now we have a confirmation of a structure shift here, confirming that this is a manipulation. This is not signaling strength. All right, so based on this, we can now start looking at for our entry. All right, so how do we get our entry? But before I talk about that, guys, just like I mentioned previously, you can clearly see that price still mitigated this POY and gave a bearish signal. Now, a lot of traders would want to start executing their orders only to be stopped out of this trade. But if you were able to identify this manipulation here, you wouldn't want to start selling here. Okay, so always understand the significance of price behavior on the chart. So knowledge in this industry is power. Knowledge is key. It is very important that you are well informed about price behavior analysis, about technical analysis on the chart. So technical analysis, trust me, is not enough and will not be enough for you to be successful in this industry. You need to have a deep understanding of price behavior analysis, and this is what I break down so that you can see and trade like the institutions do. So having confirmed our bullish structure shift, okay, let me take this out. Having confirmed that, we'll start looking for our bullish entry confirmation. So as a smart trader, like I always say, now our market is bullish, we are looking for our buying entry point, right? So first, we don't want to be a liquidity, just like this price behavior here. We want to ensure that we identify our liquidity zone, and this is our first point of liquidity. As you can see, if you have not watched my video on inducement, you can do well to watch that so that you'll be able to identify your first point of liquidity. So I'm going to identify your first point of liquidity. Next thing you want to look out for is your POY. We don't just buy anywhere, anyhow. We pay attention to smart money POIs because we want to trade alongside smart money. We don't want to counter trade the smart money moves. Okay, so right here, we have our smart money POI sitting right here. Okay, and if you do not know how to identify smart money POIs, kindly check my videos. You're going to get that very simplified and self-explanatory. So moving on here, okay, we're going to play price forward to see our entry. Remember, always plan your trade and trade your plan. Don't just jump into the market. Wait for the market to come to you, give you a confirmation before you execute your order. The market entering your point of interest is not enough reason for you to start executing your order. Like I said previously, there are price behaviors that will determine your entry. The question is, can you identify those price behavior that signals an entry confirmation? If your answer is no, I believe you know what to do next. Okay, so moving on, let's play price forward. So guys, can you see what is going on here? Price is engineering impatient traders around this zone. So you can see a strong momentum candle. All right, some traders who are unaware of liquidity want to start buying from this zone. And trust me, I believe if you impute your fib level here, you're going to see a level, a zone that signals that you continue the buy move. But regardless of the strategy that you're implementing on your chart, be it price action, be it SMC, be it ICT, ensure that you are not the liquidity. Always be patient to wait for liquidity to be taken before you buy, before you sell. So right here, regardless of this impulsive and emotional triggering move, okay, to manipulate traders to start buying early than they ought to, we will patiently wait for liquidity to be taken before we buy. Also, even if this price keeps pushing higher, we don't have anything to lose because this strategy is not our strategy and it does not validate itself on the chart. So always know when to execute your order. You must not trade every move. Make sure it aligns with your principle before you execute your order. So as you can see, like I always say, this price has grabbed liquidity from here, and then you can clearly see this strong momentum candles pushing into this zone. This does not signal strength. Based on this price behavior, this is a pumping price by big players to grab liquidity, like I always say. So we don't just start buying because prices are POI. We need to wait for a valid confirmation at least to counter this strong impulsive move, because there's a probability that this price will still keep pushing lower. So based on this, I'm not comfortable with these weak momentum bullish candles. Let's still be patient to wait if we can identify a strong momentum candle signal that the buyers are stepping in. Remember to always be patient because the market collects the money from the impatient and gives it to the patient. So at this point, for me, based on my experience and based on this strong liquidity on, I'm not comfortable to start executing my orders around here. So let's play price and see if we can get a more reliable signal to execute our orders. Okay guys, so as you can clearly see, price has given us a strong momentum candles, engulfing candle there, signaling that this zone, there is a buying interest around this POI. And it's also a signal that smart money is likely to execute their orders here. Why? Because liquidity has been taken from this zone. So at this point, we can execute our long position right here, just after the close of the candle. Remember, we don't execute our orders when the candle is still active. We pay attention after the close of the candle, because the market is dynamic. A once bullish candle could turn bearish, and a once bearish candle could turn bullish. Okay, so always be patient to wait for your candle close before you execute your order. And my usual manner, I always pay attention to risk to reward before executing my order. So we are going to be sticking to a minimum risk to reward of 1:2, and this is a valid zone because in an upward trend, price makes new highs, like and because we have identified institutional footprint, there is a high probability that this trade is going to move in our direction, because the flow of money in the markets actually comes from the institutions. Okay, and we want to trade alongside with them. So if their orders are moving price in the market, that means when our orders align with theirs, our trades are likely to move in that direction. So always note that your risk to reward is very important. Always put that into consideration. And as you can see, like I said, the minimum risk to reward is 1:2. You can have 1:3, 1:4, 1:5 based on the market condition and based on the reason why you are getting in on the trade. The market is deep and there are a lot of factors that contribute to your profitability. So make sure you are well informed about these factors. Now moving on, let's see play price forward and see how this plays out. All right, guys, so as you can see, price created a break of structure here. Remember, your market structure is very important. Okay, so price hit our target. Okay, and then we have a break of structure. So you see that liquidity indeed do fuel the market. After this, we continue with our analysis. Having identified our break of structure, where is our next point of liquidity? Can you identify it on the chart before I do the marking? So right here we have and next point of liquidity. If you still do not know how to identify this, do well to watch my videos on this channel on pullbacks, on inducement, because that's the foundation of your profitability and market structure. Once these concepts are wrong, once you do not know how to identify them correctly, you're going to be missing out on a lot of details, especially when you want to trade the smart money concept. So having identified our inducement, you can clearly see how price moved in a swift manner after liquidity grab. Okay, so this is how institutional traders stack orders in their favor, and as a smart trader, you need to position yourself accordingly. Every fake breakout, every stop hunt, every spike that made you think the market is against you was just smart money gathering orders. Now that you now have an understanding of liquidity, next time price sweeps liquidity from your liquidity zone here, you will know it's not noise. Okay, it is your signal to go long or to go short. So after a break of structure, like I said previously, we have been able to identify our liquidity pool. Having identified our liquidity pool, then the next thing is to identify our smart money POI, because we want to trade alongside the institution. So moving on, where is our smart money POI? Our POI here, all right, this is one of the smart money POIs. In this case, we're going to play price forward and see if we're going to get an entry confirmation here. Remember, like I said previously, you need a confirmation at your entry zones before you go long or before you go short. So let's play price forward and see what we've got. So as you can see, price did grab liquidity from here and did mitigate our POI. So guys, what can you say? Here you can see that this move is massive, okay, and it didn't give us an entry opportunity before the spike. Obviously, this was a news event that would have caused this spike, okay, but this is just to prove that liquidity fuels the market. Although we did not get this entry, like I always say, you don't have to catch every move. You don't need to force the trade. Always wait for a signal confirmation. So since this did not give us an entry opportunity, we're just glad that we understand the flow of the market. So guys, it's very important for you to learn how to spot your liquidity pools. Okay, if you do not know how to do that, you can use the link in the description to learn more. Okay, now a lot of traders would think this is a change of character because this is a lower low. Many traders make this mistake of identifying their previous low as a change of character. It is not always valid. There are zones where this recent low, okay, will be your change of character, and that is why I emphasize on price behavior analysis, understanding when your concept is valid. When we talk about inducement, do you actually know that there are times where you buy and sell without this particular inducement takeout? And also, paying attention to your market structure is very important, okay, because if we had not identified this change of character from this zone, we are likely still going to be trapped with these sell moves. We'll still be looking out for these selling opportunities around this zone. And also, the beautiful thing here is that I did call this trading opportunity here in my community, as you can see on your screen. So if you are not part of my community, do well to use the link in the description or in the comment box to join my community of informed and profitable traders, because we trade the smart money way, and like you can see on your screen, this is a proof of what we do in the community. I think this is all that we have for today. I don't want this video to be too lengthy. So as you can see, this is the current price chart. Okay, I'm filming this on a weekend. So if we still continue after inducement has been taken, this is our break of structure. So having identified our break of structure, we have our first point of liquidity here. Price created more liquidity pools and failed to come back into this zone. So this is where your patience is tested. So after this impulsive move, a lot of traders will think that this price has moved without them. Okay, but clearly you can see that we have an order flow here, so you can buy from here based on price behavior. Like I said previously, this is an advanced thing, and there are ways you can buy and sell without inducement taken out. Okay, so in this case you can buy from here while targeting your 1:2. I can clearly see that we have a candlestick confirmation at this POI indicating more buying interest. So moving on, price pushed higher and then created more liquidity points. Okay, but at this point we cannot buy from here. So moving on, guys, as you can see, price has started the same cycle again. Okay, after this impulsive move, you can clearly see that price has started another accumulation, just like we had right here from the beginning of this move. So at this point, price is accumulating, and if your market structure is in place also, you would also understand what is going on here. So right here, okay, as you can see, we have a liquidity pool. Guys, can you spot the liquidity pool just in a second? Okay, so right here we have a liquidity pool right here. So in this case, based on this price behavior, we need a manipulation, okay, and then a structure shift for us to go long. Are you following? So this is a different price behavior playing out here. As you can see, around these zones, we did not need this because there is no obvious accumulation like we have here. So you can see how price behavior analysis can help filter how you approach the chart and how you determine your entry. So it's important that you equip yourself with the knowledge needed to scale in this industry. Like I said before, I do not want this video to be too long. Okay, I'll be wrapping it up here. And as you can see, this is the current price chart. There is no more data for us to carry out more analysis. Now that you see what they see, the next time price sweeps liquidity and forms a clean structure break, you know it's not noise, it's your signal. So liquidity and market structure are not just trading concepts, they are the foundation of how the market truly moves. Learn to trade them right and boost your trading results. Thank you for watching. If you got value from this video, hit that like button, subscribe and turn on the bell notification so you don't miss out on any of my valuable content.